Welcome back, everybody. In today's episode, we're going to go over my Q4 forecast, my prediction for the earnings to come out by the time you're watching this today. Well, I guess I might release this tonight, actually, just so you guys have more time to have it. So you'll see it tonight. So I'm going to release my Q4 forecast. Earnings are tomorrow on Wednesday, the 26th, after the market closes. And so really don't have much more to talk about. The stock price, it did pretty decent today. We were in the green at one point, up about $14, so that was kind of refreshing to see. We did close lower, and we were down a little bit in aftermarket, but you know what? Overall, it's good to see just things kind of steady out a little bit. It's good to see us sitting above 900. Didn't touch the 800s really today, so that was kind of it was a nice break, right? It was a nice breather of what's been happening. So today was, in my opinion, today was a very good day. Today was a very strong day. If things would have gone just up today, I think that would have actually been more of a negative thing. So this kind of consolidation, maybe this is a floor we've hit. Everything will really be decided tomorrow between what the Fed announces and then obviously what happens with Tesla earnings. So, tomorrow's a big day. Like I mentioned in yesterday's video, tomorrow is D-Day. So with that said, we can't do anything about the Fed. It is what it is. It's going to happen. Hopefully they say something that is, consistent and strong enough to make the markets think that the Fed knows what they're doing, that they're not going to keep flip-flopping on what their decision is. We have no control over that. We can just hope. With regards to Tesla, this is why I love investing in companies, because we can model things out. We can understand what's happening. We understand the amount of vehicles delivered, the average selling price, and we can actually model this out on what earnings should look like. Doesn't mean we can predict what's going to happen with the stock itself. The company and the stock are, disassociated from themselves as much as they shouldn't be, but they are. So what we can do is at least control what we can control, and what we can control is understanding what the numbers are based on delivery. So today, we're going to go over my numbers, my forecasts. Not to say that they're right. I think that I'm going to be pretty damn close this quarter. If I'm wrong, it's only going to be wrong to the upside. So, I think lots of room to run here. So with that said, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into my forecast for Q4 earnings for Tesla. So here's my spreadsheet. This is the model I use to forecast what I believe will happen, quarter over quarter. You can see what we've had the last few quarters here, and we're going to look right here into this blue where it's my estimates for Q4. So right out the gate, easy number, first of all, is Tesla deliveries, and we obviously know that based on Tesla's release. So really, this number is what will be the foundation for everything moving forward. And so in order to go from delivery units to automotive sales, it's really a guesswork as far as average selling price per vehicle. Normally what I do is I try to take a look at what the ASP, the average selling price of the last quarter was, and use that. That way I'm a little more conservative. But this time I decided to up it a little. So instead of being around $50,000 per vehicle, I decided to bump it up to $52,000. And so that gives us, at about, 16 billion here in revenue. Now, why did I do that? Well, the reason I decided to bump it up is because Tesla's been increasing their price per vehicle literally almost every single month. And we have yet to really see it come to fruition on that balance sheet. So I think now we're going to start seeing some of that. So that's why I bumped it up. And the reason I didn't go too much higher besides 52,000 is you got to keep in mind, in China, they're selling a lot of the standard Model 3s, and those are lower priced vehicles. So, there's a balance, and, you throw in more Model S's in there. So 52,000 can be conservative, but I think it's going to be a pretty good number moving forward here. Now, with that said, energy credits, again, these are credits that Tesla gets paid for by other automotive companies, and you can see what the trend has been. The trend's kind of been going down. So I just decided again to just be more conservative and say 250 million. It's, about, call it about 30 million less than what it was last quarter. And again, these numbers at this point don't really matter. We're talking about Tesla, netting billions per quarter. So, the couple 100 million here or there, it doesn't really move the needle anymore. So 250 it's nice to have. Doesn't really matter, in my opinion. Now, when it comes to energy sales, now this is where, if my model is wrong, this is where it's going to be wrong. Because, again, I'm predicting that, Tesla Energy just marginally has done better. Yet, we know there's been a lot of new Megapack sales going on out there. Sawyer Merritt recently had a picture of, I think, something like 300 million worth of Megapacks ready to be shipped. So there's a lot of ramp up with the Megapacks. And I don't know what Tesla was able to do in Q4, right? So this is where I'm choosing to be a little more conservative. Is it bumped up from last quarter? Yes. Not by that much, though. So my anticipation is that if I'm wrong, but by any real margin, it's going to be here. But again, this is, just under $1 billion, really. So overall, it's not that big of a needle mover. So if I'm wrong, by the time we get all the way down to our GAAP earnings, it's not really going to be that much of a difference, right? I don't even think it would reflect a cent here or there. So just calling that out. Again, keep in mind, none of this financial advice. All of this is just my predictions, and it all stems from the actual delivery numbers. That's the only real concrete number that we ever have in this. Everything else is more or less speculative based on what happened last quarter, or what's trended in the past, or what we've seen happen, or what we forecast to happen, right? Such as increasing the average selling price of the vehicles. When it comes to services and others, I did bump this up a little bit to 921 million. It's a little higher from last quarter. Really, I think this might be a number that gets bumped up, just mainly because Tesla is doing so much more with the same amount of resource, same amount of people. But I think there's a chance that they have spent more money due to this, right? There's a lot of things happening. Model S is ramping up. Model X is ramping up. They have deliveries to, all these different places. Shanghai's ramping up. So I think services and other, there might be some cost to see this go up a little bit. But again, this is such a marginal difference, and it is still technically down from what it was in Q2. Total sales, we'll be looking at about $17.7 billion. That's total revenue essentially for the company. This is monster. I mean, just look at what it's been. If you look at Q1, 10 billion, Q2, 11 billion, Q3, 13 billion, and now Q4 up to 17 billion. Like, this is growing faster and faster every single quarter. And in reality, as these numbers get bigger, it should be, it should be growing slower, not faster, but it's growing faster. And again, I'd be hard pressed to believe that I'm that far off from the actual numbers here. And if I'm off, it's only to the upside, not to the downside. But again, just my estimation here. Automotive profits. I have here about 4.8 billion, which, as you could imagine, yields into a pretty decent, let me just bring this all out, to a pretty decent automotive gross margins. So down here, you can see what the percentages are. Up here, you can see what the numbers are. Again, 250 is from the regulatory credits. Energy profits, I just have about 13 here. I think that this is starting to get more profitable as we move forward. We saw some of it last quarter. It just seems like it's trending in the right direction. I still don't think we're anywhere near that kind of mass, quick, exponential growth that we want to see. But I think towards the end of 2022, we'll start to see that, especially with the new Megapack factory coming online, really starting to spit out more of these Megapacks. So, keep an eye out for that. That's a Trojan horse, right? That's a sneaky one that a lot of analysts, act like Tesla's energy business is a bust. It is not. It is far from that. It is growing faster and faster. In fact, in the last earnings call, Elon Musk even said that they have such a big backlog. Like they have, just as they have on the vehicles where they have a production problem, not a demand problem, the same goes for the energy side. They have a production problem, not a demand problem. So look for this one to grow really quickly. Services, I see this maybe being a little less negative than what it has been historically, but either way, I still think this comes out to a total gross profit of about 4.8 here. And again, a chunk of this comes from the regulatory credits. Now, as far as gross margins, so I actually have this coming down a little bit. I have this down to 30%. Why is that? Well, I think, again, here we saw 30.5% last quarter, 28.8 minus regulatory credits. But this 30%, the reason I see this kind of coming down just a little bit is just because China is going to have so many of these Model 3 vehicles that I think that might have a little compression on the margins. But if you look at it holistically, it's actually a slight bump up when it comes to auto gross margins. Not really by much. It's actually more like 0.9, 28.9. So this is just rounding up. But I think we pretty much just hold the course here. I don't think much changes. I think a lot of the vehicles that we saw up here being delivered come from the Model 3. Yes, a lot of Model S's have been delivered, but I think it kind of balances out what we've seen with the Model 3 from a gross margin perspective. Now, this could be very wrong, by the way. We could easily see Tesla starting to have 32, 33% gross margins. I just don't think we jump up that quickly. I mean, if you look at here historically, if we go up, it's maybe 1%, maybe 2% at a time, nothing too crazy, but you got to remember, every one of those percentages is huge. And this is where we really start to see that operating leverage start to come in as well. We'll talk more about that in a little bit. All right, so scrolling down here, we can see here X credits. We see the energy gross margins. Again, the energy business really isn't moving the needle right now, right? It's not that big of a deal. So, it's something to keep an eye on to see which way it's trending, but it's not something that is really going to be a big factor for the quarter. Will it be? Again, I think in 2022, it will be. All right, so let's go ahead and uncover some of these. So as far as R&D and SG&A, keep in mind, Tesla tends to, I don't want to say hide, but this is where they also put a lot of their stock compensation for their employees. Elon Musk as well. Remember, he's only paid based off of that stock compensation, so those tranches. So a lot of that is, baked into these numbers. I like to pretty much keep them at the status quo, if not bump them up a little bit. Here you can see I kind of kept the SG&A roughly the same. It's a little lower here, but up here you can see R&D's bumped up. Really, if you add these two up, it's pretty much a wash. This might be wrong. Okay, these numbers might be higher as far as the expense. And the only reason I say that is because with Austin coming online, with Giga Berlin coming online, they might have a lot of these stock options already accounted for in Q4 for those employees, but they might not. So we'll have to see how that shakes out. And a lot of that will probably really come into the fold as Austin opens up and Berlin opens up and the quarter that precedes those openings. So this is something to keep an eye out for. But again, I don't think it really moves the needle much here. As far as operating expenses, you can see here, I think this pretty much just stays the same. I don't think this changes much. Tesla, again, right, they're doing more with the same amount. And so that's where this really starts to get a little crazy. And you can see the operating income here at, $3.2 billion, right? That's insane. I mean, if you just look at where we came from here, in Q1, we were looking at 594 million, and now we're up into the 3 billions. I mean, just thinking 2 billion last quarter was insane. And now we're looking at 3.2 billion. Now, this may sound, kind of crazy, like, no, there's no way that can't be the number. But keep in mind, we went from 500,000 to 2 million, or to 2 billion, excuse me. And if I scroll up here, if we look at the delta here for the vehicle sales, that's, about, call it 50,000, 60,000 more vehicles, right? Well, Tesla just did about another 70,000 vehicles compared to that delta. So this number is very realistic in my opinion. And again, it just seems crazy when you see how this fast is growing. But I don't think the numbers lie, and I think you're going to see this come to fruition whenever Tesla goes through their earnings. And so that leaves a operating margin of 18.2%. This is nuts. Okay, you will not see this from other high production auto manufacturers out there. All right, let's continue here. I'm just going to build all of these out, and we can start here with Ebitda. I talk about this every single time. I'm horrible at really figuring this out. Really, the Ebitda is just taking out the taxes and interest, but it's hard for me to really figure out what Tesla's doing there. I'm never that far off, but it's not one I'm ever truly confident in. But with that said, net income, I think we see non-GAAP, we see about 3.3 billion there. Stock-based comp, you can see I have here 474, and this essentially just stays right in line with what it's been. And again, I think this can really change if they account for Berlin and Austin. We'll find out eventually. As far as earnings per share non-GAAP, I'm calling 2.96, so $2.96. And as far as a GAAP diluted, I'm calling 2.3 so $2.30 per share. So I think I've seen some estimates out there. A lot of our numbers are very different, but a lot of us are still kind of coming out to these same numbers, at least on a GAAP perspective, this $2.30. I think this might be very conservative. I think the hardest thing to really account for when it comes to Tesla is this operating leverage. So the fact that they just did so much more, right, with the same amount of resources, the same amount of lines, the same amount of factories, yet they just spit out an extra 60, 70,000 vehicles, right? So if they just did an extra 60 to 70,000 vehicles and they were at $1.44 last quarter, I mean, like these numbers, again, it's like when you're doing these numbers and you're putting all the inputs in, you almost have this bias of trying to downplay your numbers just because you're like, this can't be real, right? Like it's the same amount of factories. Nothing's really changed. This is not including Berlin. It's not including Austin yet. This is what the numbers come out to. And I tried to be a little more conservative last time, and it turns out I shouldn't have been, right? I should have stuck with my initial numbers and I would have been dead accurate. So this time even though I'm still kind of being conservative because of what I have for the average selling price per vehicle, because of Tesla Energy, because of the stock compensation, things of that nature, I still think this is a little conservative, but I think this is very realistic at $2.30. The $2.96, that gets a little different, but I still think, I think I've seen some people with $3.15 out there. So I think this is going to be a record-breaking quarter, as will every single quarter preceding this. Next quarter's going to be better. Hopefully we have some Austin. Hopefully we have some Berlin in those numbers as well. But, we're sitting here at a run rate of 1.2 million vehicles a year with these two factories, right? 308 by 4 gets you about 1.2 million. This is what we're looking at. And we have two more factories coming online. So this is happening. It's real. I mean, again, I can't express this enough. This is that exponential growth we've been talking about. I mean, again, look at this. Q1 of 2021, we're at 93 cents. Now we're at $1.86 to almost $2.96. If this comes to be true, this is essentially 3 times what we had initially here, right? If we look at this, $2.30 versus 39 cents, like that's insane. Right, 144 seemed like it was insane. And it just keeps going up and up. So this quarter is going to be ridiculous. I think even more important than these numbers, because I think a lot of these numbers, I don't think they're baked into analyst predictions. I think analysts are still, and you want this, okay? So for everybody who says these analysts are still behind the curve, that they're not really valuing Tesla accordingly, we want that, all right? Because then we get the chance to beat the analysts. If the analysts get ahead of us, well, then the narrative changes and it becomes, oh, Tesla missed estimates because the analysts have just kept overshooting. So it's better for us as investors to have the situation be what it is. So keep that in mind when you see these analysts lowballing Tesla. We really want that, right? We don't want to be on the other side of the coin there, because then Tesla can have a phenomenal quarter, and because analysts had projected higher, it just doesn't look as great, even if it was a record-breaking quarter. But these numbers, again, I think analysts are kind of expecting this already. I think they're expecting great numbers. The real needle mover in this call, and I say needle mover, but right now there's so much macro, flux and movement in the world, right? I mean, there's just so many things happening. The Fed will speak at 2:30 tomorrow. We can't really predict what's going to happen. But as far as, let's say there were no macro situations. What would be the real needle mover tomorrow will be Elon Musk talking about the Tesla product roadmap. And I have to believe that there's some good news to come, because Elon specifically said that on the next quarterly earnings call, he'll come on to talk about product roadmaps. Why would he do that if he really didn't have anything to talk about, or if he was just going to talk about things being delayed? If that were the case, he would just let Drew and Zach handle the call and, just let it be another normal earnings call. Seems like Elon's coming on to talk about some good stuff. Seems like he's coming on to tell us Austin's up and running. Model Y is going to start production. We'll start delivering by the end of the quarter. It's going to have the 4680 battery. Maybe even something to do with the Cybertruck. I'm sure you've all seen the pictures now of the new version of the Cybertruck. The more alpha version of the prototype. Looks pretty much the same, maybe a little stubbier than what we had before. And I think a lot of that is mainly to fit into garages. Elon talked about that when he drove around with Jay Leno, talked about taking it all in about 10% so it could fit in garages, which I think is a very, very key factor. My neighbor ordered a Ford F-150 Lightning, yet it's not going to be able to fit in his garage. And he has an F-150 now, and he's tried to put that in his garage several times, and he still can't. It's just not a good fit, but clearly he wants to. And it's not like it's a small garage. I mean, we both have 2-car garages. They're pretty deep garages, but the vehicle is just too big. So I think making this move with the Cybertruck to make sure it fits in a garage is a very smart one, and it's thinking about the user experience. So if an announcement is also made about the Cybertruck, or something as far as we're going to start going into small production of the Cybertruck, or something along those lines, anything really positive to indicate that things are progressing along with the Cybertruck, I think that'd be major. 4680 battery actually starting production, that would be major. Now, I don't expect 4680 batteries to replace all of the 2170s, right? I think it's going to be more so a kilowatt hour type battery at the end of the day. What I mean by that is if you have a 60 kilowatt hour pack, whether it's 2170, 4680, I don't think it's really going to matter at the end of the day. I think, for Tesla it'll matter internally because now they have more battery supply. 4680 batteries more cost effective for them to make. But from an end user perspective, I don't think you'll really know what you have. I could be wrong though. Maybe Tesla decides to sell those at a more of a premium cost because they can go longer, they can charge faster, right? It's a structural pack, so the ride's better, so maybe it's a more premium type vehicle. We'll have to see. But I anticipate Elon giving us some good news, maybe some sobering news about Berlin, if he even touches on it. So a lot of things to be excited about. Tomorrow's a big day. Again, if for nothing else, just because of Elon talking about the product roadmap. Don't forget, tomorrow, Jerome Powell is talking at 2:30, or we'll at least get the release of what's going on. Keep an eye out for, the word choice he uses. Hopefully he does something to calm the markets. I don't expect him to say anything about we're going to reduce the rate hikes, or we're only going to do X amount of rate hikes. I think we're going to see a consistent message of, we're gonna taper. We're gonna go ahead and increase our first rate hike will be 25 basis points, or a 0.25%, come March, and then we'll go from there and we'll see what happens. He might say, we'll see 2 or 3, but I don't anticipate this whole narrative of 5 to 6 rate hikes. I don't think that's going to happen unless he wants to be the reason why we go into a recession. I mean, that'd be the only reason, and I don't think that's good for anyone, right? It's not good for the current administration in the White House. Do they want inflation to come down? Yes, but if the stock market tanks, there is no doubt they will not get reelected, especially going into midterms. So there is a balancing act there, and I get it. The Fed's supposed to be unbiased, but any of you who actually think the Fed is unbiased and not politically influenced, you have been living under a rock, in my opinion. The Fed is definitely politically influenced, but they do their best, I think, to try not to be. But, at the end of the day, the president is the president, and these influences are real. So a lot said there. Those are my numbers. Those are my projections. Hopefully they're wrong, and hopefully things are a lot better than what I've even forecasted here. I think tomorrow's just going to be an exciting day regardless. Again, none of this really matters. Just keep this in mind. Think about the bigger picture. Think about the long term. For those of you who have shorter term options, I empathize with you. hold on tight. If you are sitting there in a very precarious position, close out of it. Take the loss. It's not worth not being able to sleep at night. Trust me, we've been there. It's much better to be able to go to sleep and wake up and have that peace of mind. But long term, none of this is going to matter. The only thing that we'll remember from this time period will be if Austin Berlin Open, if something about the 4680 batteries really announced for production. Other than that, this will be a blip in the radar. Remember, we're headed towards 3, 4, 5, in my opinion, by the end of the decade, $10,000+ per share. This is just the beginning, okay? We are at $920 a share right now. We have 10x to go over the next decade. All right, gonna leave it there. I'm just rambling at this point. Hopefully this helped you guys. Hopefully it showed you guys my process, my numbers, what I look for. But with that said, gonna leave it there. Do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all, and let's have fun tomorrow. Peace.